Welcome to Busy Brain Club, where thinking is free and we should do more of it. Okay, welcome to the live stream. We have a very serious topic to talk about, and it involves our banking system. All right, let me bring that up real quick. Okay, you will have to brace yourself. Now, I am trying to address a particular question a subscriber asked me. Let me see if I could pull this up real quick. It's asking a very simple question that I would probably overlook, like assuming that everyone would know what would happen. So the question basically asks, if everyone pays back the bank, why would there be no money left in the system? Fractional reserve banking. And there's a document that you could research called Modern Money Mechanics that details the practice of fractional reserve banking. Every single bank practices fractional reserve banking. It stems from the central bank of the country. In terms of the United States, it's the Federal Reserve Bank. In Japan, it's the Bank of Japan. Those are the banks for the government. And then every bank follows suit with the same rules that apply to the population when we want loans for housing and projects and cars and whatever it is, engagement rings, it doesn't matter. As you can see on the screen, you have the producer, the banker, and the consumer. And I'm going to introduce these three, and we're going to do transactions just as normal people would in an economy. Now, granted, this is going to be a very simplistic view of the economy. That's the only way you're going to grasp it. There's the way they've built this our whole economic system, you will get confused with all the jargons and all the fancy words and so forth. The whole global economic system is gonna go through a bit of turmoil in the very near future. So near in the future that I am 41 years old. It is so near in the future that I am concerned about my retirement and what it is going to look like. Meaning, I'm not sure currencies are going to be valued at how you think they're going to be valued. I don't know how much theft is going to happen. There's a likelihood we're going to end up in World War III if we don't figure out this thing. That's how bad it is. The first thing we're going to do is introduce these people. Now, I'm doing this in Photoshop because I'm really good at Photoshop, and I'm trying to use some other software and it just didn't work for me. So all banks will fail. A description of the currency crisis, right? So first, let's introduce the producer. So this is Tom, the producer. He's a God-fearing individual, and he produces things just like any other entrepreneur or business. They produce goods and services for the population to consume, and it could be anything you could think of. In this case, he is a producer of pots, and these pots are necessary because they hold drinking water, and everybody needs a place to store their drinking water, right? And let's introduce my guy. Where's this? Harry. Let us introduce Harry. Harry would be our consumer, and Harry is a doctor, and doctors work long hours and they need places to store their water. Now, as I said before, it looks silly, but I have to break it down in very simple terms so you could understand. So you have Tom the producer, you have Harry the consumer. Harry would be me because I don't produce anything, maybe content. All right, so let's go. Now, to make a clay pot, all you need is dirt and water and sunlight. So Tom figured out a way to create these vessels for storing water for the population, and Harry needs a clay pot, but Harry has no money, and this is where we're going to introduce the bank. So in order to purchase a clay pot from Tom the producer, Harry has to go to the bank, and his representative at the bank, what's his name? Dick? Where is Dick? There is Dick, and Dick is a clown because that's how I think of these people. No, I know you probably work at the bank, whoever is watching this. It's not a dig on you. I'm just saying the bank is a clown show, and I'm going to explain why it's a clown show. And the people that work at the bank are in the circus. You get me? So You guys are the clowns. So here we go. We got Dick. What's next? So now Harry goes to Dick and say, listen, I need to buy some clay pots or a clay pot from Tom. I have no money. Can you give me a loan? And Tom, what's the price of these pots? Each pot costs $10. Let's put the $10 here. So that represents a pot. Each pot costs $10. Harry wants to buy it. He doesn't have the money. He needs to go to the bank. So he goes to this clown called Dick. And Dick is his banker. Dick says, yes, Harry, you can get the $10. It's unsecured. We have this facility, whatever. Dick sends over the money to Harry. So Harry now has $10 that he owes the bank. We call that owes $10. And that is in red. Let's put it in red because he owes the bank $10. Let's put that right there. On the bank system is income, $10 plus interest. Because every bank lends money with interest, and let's say the interest is $2. So in all, to complete this loan, Harry, and let's put this in green because this is income for the bank. Harry gets $10 from the bank, but he actually owes $12 because he has to pay interest. Now Harry needs pots, so he takes the $10 that he got from the bank and he sends it over to Tom. Now Tom sends over the pots. Okay, so there we go. So Tom sends over a pot to Harry. So now Harry has the pot and he's broke, but he owes the bank $10. So let's put Tom has an account and it has $10 in it because he just sold a pot to Harry. Harry has $0 at this point. So let's put that $0. Now let's take a freeze frame of the current system. So Tom produced a pot for $10. He sold it to Harry for $10. The bank gave Harry the loan for $10 and he's required to pay the bank back at $10 plus interest $2. So now Harry owes the bank $12. Tom needs to make new pots, so he has to go to the bank. Tom goes to Dick. Dick says, okay, you got a business, you selling pots, perfect. I will lend you $100. So now we got Tom on the bank's balance sheet. And the bank is lending Tom $100, say plus $20 as interest. So he will owe in total $120. So he will owe $120 to the bank, and it's in green because it's an income for the bank. So he has $10 in an account, and now with the bank lending him $100, he now has $120 in his. He has 10. Now he has $110 in his account, and Harry is broke. So Tom has $110, and now he's gonna pay Harry $100. All right, so let's just add it. This is gonna be what, $100? $100. Perfect. So now let's freeze this system and let's give account to what is going on. The producer, the guy with I need to add his all the pots that Harry helped him make. So the producer has $10 in his bank account, but he has an inventory of 100 pots to sell to anybody that needs pots. When you look at the bank has two loans in operation. The bank has a loan with Harry and he has a loan with Tom. Harry's loan is only $10 and with $2 as interest for the loan. Tom's loan is a little bigger. It's $100 plus $20 as interest, so it's $120. If you freeze frame this system, and this is how what you have to understand when it comes to the bank. The bank lent Harry $10 first, and then he lent Tom $100. The bank didn't take that money from deposits it currently has. The bank basically prints that money into existence. So let's say initially, and this is probably where I should have declared how much money is in the bank itself before we did all the transaction. But just say, for example, the bank had $10, because it doesn't matter how much the bank has. The bank has $10 in the vault. That's all it has. And that is enough money for them to lend or print $10 to Harry. And it's enough money to print $100 to Tom, and they asked Tom and Harry to pay this money back with interest. And this is where the problem in the system lies. They didn't print the interest for them to pay it back to the bank. Only the principal exists in the system. So when you try to pay it back, at the point where you've paid back all the principal, there's no money in existence to pay the interest. So to answer that viewer's question, this is why when people say if we were to attempt to pay back all the money, there will be no money left in the system. This is the reason. The banks only print because it's attached to debt, the bank only prints the principal, but they ask you to pay back the principal plus interest. And there is not enough money in the system to do so. What it does, that disequilibrium, or for lack of a better word, asymmetry in the system, causes ripple effects down the road where you're always borrowing money from a bank to support the system. At some point in time, when you try to earn as much money, you're gonna hit a wall and you're gonna be like, you know what, let me just borrow the money from the bank, because you can't get enough to do it in the time frame that you want. And so it creates this cycle where you always need the banks to finance things, because you cannot pull enough money out the system to do it by yourself without the loans. At some point in time, you have to deal with the bank. And then you have a few people who say, well, I only use cash. That is, you are in such a minority. It's so unbelievable. You are not, because you use cash, it doesn't mean you don't feel the effects of all the bullshit that goes on in the bank. So anyways, you look at the system now. Let's do a calculation as to how much money is in the system currently and how much money is owed. We know that we started out with $10 with the bank. We know the producer, he has $10 in his account, and we know the consumer has $100. So you're looking at $120 in total. That's in this economy. That's cash that we could use. So he could buy a Starbucks out of his $100. The bank could, I don't know, buy some donuts for the staff, and the producer, he could put gas in his car with his $10. But look at how much money is owed. It's $120 plus 12. So that is $132. So this is the inherent problem with our banking system. And this is just the beginning. This is the very foundation, the formula that governs it at the base layer. Creates this asymmetry from just two transactions. One entrepreneur requesting money from the bank so he could get working capital to hire employees, and another just a regular consumer that wants to buy a product but doesn't have the cash yet. This is how the system breaks, because when you run this system over a period of time, taking into account all the people on the planet that are interfacing with all these banks, countries and so forth, the asymmetry that exists in the system is so large, it's in the trillions of dollars. It is the reason why the US currently owes what, 30-something trillion dollars. I mean, this is crazy, but I think everyone needs to know this is what is happening so you can make better informed decisions towards the future. There's no way to avoid this. I'm just gonna switch banks. It doesn't work like that, because they're all governed by this rule of fractional reserve banking. It's the worst thing in the world, but what you gonna do? You can't do anything about it. You have to understand what it is and how it affects you as a person and affects the country that you live in.